Dan Morehead, good to get you finally back on Real Vision. And it's the first time we've sat down to chat for a long time. And you reached out recently because of your macro views. And I thought, who better to talk through macro and then where we potentially could go with this than you. I'd love for you just to quickly let people know kind of why you're involved in macro, because people now know you from a different space than the world that I knew you from originally. So if you give a bit of background about yourself, I think that'll frame everything nicely.
I started out as a fixed income mortgage trader at Goldman in the 80s, actually right before the 87 crash. So I've seen one of these cycles before. And then you and I met when we were, when I was at Tiger Management, we were trading global macro, big disruptions around the world, trying to see things from a very global macroeconomic standpoint. And in 2011, I got excited about Bitcoin and had been full on blockchain since then. And up until recently, global macro really had no impact on blockchain. And, the reality is the worlds are now all interdependent. And global macro, I think, is going to have a huge impact on blockchain. And in particular, the fiscal and monetary policies are going to impact cryptocurrencies.
I must admit, it was a genius move of you to do what you did. That was the best macro expression I've ever seen, which is basically to say, and we've seen lots of our friends go through the same cycle, but you were by a long way first, saying all of the macro opportunity set added together is less than this one opportunity set. So this is the macro view. And that was essentially what you did. And it was incredibly prescient of you to do that. I just thought, it was just an amazing thing to have done. And you kind of got in at the right time and understood it a long way before everybody else.
Thanks. Yeah, I've been fascinated by these disruptions that come along, Russian privatization or Argentine farmland or Tesla Motors. Every 3 or 4 years, something kind of little shiny object in the forest that I pick up and try and figure out and spend, a year or two investing in it. But I do think blockchain is literally orders of magnitude bigger than all of those trades. And I think it's the second half of my career. So, I'm really excited to stay focused on it.
So talk to me through, how are you perceiving the situation now? Let's dig into the macro, because there's a lot going on and a lot of people are confused kind of where we are now and some of the probabilities of how things play out. And then we can kind of dig in and chat about things as we go.
The first, main thought is I'm not an epidemiologist, so I'm going to leave that to others. But having studied 35 years of global economics, this thing is just bigger than anything since World War II. And I think even I'm trying to get my head around that. But I think a lot of economists and market participants are still kind of not yet appreciating how large this thing is. Here's just one quick thought experiment. Is the least bad way to combat the virus is for everybody on Earth to shelter in place for 2 weeks. And at the end of that 2 weeks, we test everyone, and those who are infected get medical treatment, and the rest of us go back to work. That is absolutely the least bad alternative. And even that, if you take 2 weeks divided by 52, that's 4% of global GDP. That is just such a huge number. And yeah, some of us can work remotely, like you and I are, adding a little bit to GDP here. But, for most people, most industries, it's very difficult to work remotely. So the least bad outcome is 4% to global GDP. And then the unfortunate reality is this virus is kind of ebbing and flowing around the world in a very asynchronous way. China, who led us into this crisis a few months ago, is actually starting to come out of it right at the same time. Countries like the U.S. and Canada and Europe are kind of right in essentially the nadir of it. And then there are other parts of the world that have yet to experience it, but unfortunately are likely to. So as this thing washes around the world at different times, it's essentially extending the amount of time the global supply chains are down.
Yeah, I mean, that's my big concern is the market wants to believe in the old world, which is it's an event like 9/11, you take the hit, there's a bit of a shock, and we return to normal. But I look at two factors within this. One is the rolling nature. Countries like Brazil have barely started in this cycle, while other countries are more advanced, like South Korea, Singapore, or even Italy. And the US has really kind of messed this up in terms of how that works. So I worry that this rolling cycle continues, as you do, much longer than people anticipate. So it's not a 3-month event that the market's kind of hoping for. I also think there is a lot more psychological damage that comes from this. Even when you reopen economies, the Prime Minister of Singapore made an amazing speech explaining that, listen, Singapore's not going to open its borders, probably not for a year, because how can it? And he said, look, we're going to have to take this hit, but nobody's going to be freely traveling. Nobody's going to be congregating in groups. Barring a miracle, this thing's around for a long period of time. So you don't get a one-off GDP hit. You end up with a drawn-out recession.
Well, I think you're spot on. It's unfortunately our central case is that this will be drawn out for many, many months. And there is a psychological impact to it. You know, if you think about all other recessions, they're created by a lack of either credit or income. And if the government provides those things, you can all get back to work and it's all fine. In this case, it's a psychological impact. This is all very distressing. And it'll be really hard to get people back to work. And you know, a lot of the economy's the consumption of services. And, you know, I was thinking about how tough the Fed's job is here, right? One problem is they're already so close to zero, like all other central banks when we came into this, that they really had little to do. But their last cut was 100 basis points. You know, I think that's impotent, right? Like, hey, honey, the Fed cut 100 basis points today. Let's go to the movies. Like, it doesn't have any impact. They could cut rates 1,000 basis points and I wouldn't go to a movie theater, right? So I think that is going to make this last a lot longer than people think. China's trying to reopen, and there's a great photo of a movie theater absolutely empty, right? Like, you know, even if they're officially open for business, the psychological damage is going to take months, or you even suggested potentially years. And then your point about 9/11, we actually mentioned that in our investor letter. You know, there's already talk of this being a V-shaped recovery, and it's, you know, just going to be right back to business as usual. I think there's so many things that I have no idea what's going to happen. This is an incredibly uncertain time. One of the only things I really believe strongly is it's not going to be V-shaped. That the comparisons to 9/11 are really starkly different. In that case, every aircraft was grounded for 3 days, and then 3 days later, every aircraft was in the air, and commerce could restart. This is just, you know, the effect has been slowly percolating. The CDC knew that this was a problem in China in late 2019. So this already, we're going into our 4th month of this. So, you know, we're just starting to attack it. It's going to take many, many months to really bring this under control.